The ongoing effects of the economic uncertainty continue to soften our market this week as we see all but one metric drop. I'm Tony with Clarkson Santoro, and this is our real estate update for September 30th. In this series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those numbers mean for you as a homeowner or as someone who is looking for a house that you will love to call home. The current inventory is 56 homes, up from 50 last week. The average asking price of those homes was $1,988,000, which is up from last week's average of $1,919,000. 5 homes asking an average of $1,925,000 went pending this week. That is less pending homes than last week's number of 7, with a lower average asking price from last week's $1,964,000. A total of 7 homes sold this week with an average sales price of $1,755,000. That average price was up from last week's average price of $1,697,000, and the total number of sold homes was lower than last week's 13. Okay, so now that we know how our market performed this past week, let's look at the key metrics that we track to help us understand how the San Ramon market is performing and where it might be heading. First, let's look at inventory. This is the first time in nearly 10 weeks that our inventory has increased week over week. It is only up by 6 homes, which isn't a large number, and with the other trends we have been observing in the overall market the past few weeks, the increase is not surprising. Last week we scored this indicator with a 50, but this week we are lowering it by a few points to 46. The next indicator relates directly to the inventory level, and that is the market turnover rate. This number gives us a clear picture of supply versus demand, and it has continued to drop this week. That means that our supply is starting to noticeably outpace demand in our market. We are now sitting at a turnover rate of 0.63 times per month. Last week we gave this indicator a score of 42, and this week we are lowering it to 35. The over-under asking price is the next indicator we track. This indicator has continued to trend towards equilibrium this week as the under asking price improved by $4,000. We are now at 2.1% under asking, which is better than last week and well within the range of a typical market. Last week we gave this indicator a score of 45, and this week we are leaving it the same at 45. The last statistic that we watch to track the current health of the market is the average sales price, and that average sales price continued to decrease slightly this week. The 30-day rolling average sales price now matches the closing price that we saw in the middle of last December. Last week we gave this indicator a score of 58, and this week we are lowering it slightly to 55. We have 2 more trends that we pay close attention to, and these help us predict and prepare for where the market is heading. The first of these 2 is the strength of the Silicon Valley tech industry. The Triple Q fund that we watch to gauge the strength of the tech industry continued its downward trend this week, now sitting at its lowest point since September 2020. Last week we gave this indicator a score of 36, and this week we are lowering it to 33. The last indicator that helps us predict the housing market's future is interest rates, and they continue to rise this week. Interest rates are up another 41 basis points this week to 6.7% for the 30-year fixed loans. This continued increase in interest rates is seriously reducing the buying power of people looking to purchase a home. Last week we gave this indicator a score of 32, and this week we are lowering it to 27. Overall, we are seeing the effects of the ongoing economic concerns in our local housing market. All indicators took a negative turn this week except for the over-under asking price. And with the way the Fed is continuing to push strong action to try and curb inflation, we are likely to see a cool market for a while. Last week we gave the overall market a score of 38, and we are lowering it again to 35. For sellers, this can be discouraging news as you see some of the massive equity you've built up in your home start to dwindle. But to keep it in perspective, unless you bought your home within the last 10 months, you are still well ahead of when you purchased your home as far as market value is concerned. It is still imperative that if you do choose to sell in this market, that you do all you can to really impress as many buyers as possible with how your house is presented. For buyers, you are still facing the double-edged sword of a cooling housing market in the midst of a downtrending economy. The homes that you were looking at a month ago are likely still available, and if they aren't, the comparable homes coming onto the market will probably sell for less. The only problem for you right now is that your money just doesn't go as far as it did just a couple months ago, so that is still going to limit your options. I hope this weekly summary and commentary helped you understand how our market is affecting your options. Let me know in the comments down below or contact us directly if you have specific questions about how you can navigate this market to buy or sell a home. And if you find this information helpful, share it with a friend. Hit the like button and subscribe so that you'll always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.